Good day fellow traders and value investors, and welcome back to another video. Today we continue our series start with the A's, and we are now at letter V. We'll look at Visa. Everyone talks about growth stocks when times are good. But what about when things get ugly? When the economy slows, layoffs hit and market starts panicking. What stock actually survives? Because here's the crazy thing. Even in a recession, people still spend, they still buy grocery, they still tap their cards. And Visa sits in the middle of a lot of those transactions. And the question I want to answer today is simple. Is Visa actually one of those recession-proof stocks, or is that just a comforting story investors tell themselves? Let's get into it. So before we talk about valuation, recession-proof narratives, or the chart, we need to understand what Visa actually is. Visa is a global payments network. When you tap a card or pay online with Visa card, Visa's network helps authorize, clear and settle the transaction between the customer's bank and the merchant's bank. Visa explicitly says it's not a bank, it does not issue cards, does not lend money and does not set cardholders' interest rates. Visa sits in the middle, moving the information fast, securely and at a massive scale. Visa has four main revenue pillars, and this is important because it explains what drives EPS in our bear, base and bull case scenario. Service revenue is the first pillar. This is tied mostly to payments volume, basically how much money runs through Visa's cards. Data processing, this is tied to the number of transaction Visa processes, like how many times people tap, swipe or pay online. International transactions is tied to cross-border volume, meaning people buying something in a different country from where their card was issued. Cross-border tends to be higher volume for Visa because international payments are more complex and Visa earns more per transaction. And finally, other value-added services as well. Visa isn't just a card network anymore, it's also selling tools and services on top of the network. This includes fraud prevention, tokenization, data analytics, consulting, and money movement products like Visa Direct. And there is one more item to be aware about in the revenue. This is client incentives. This is a negative. These are money that Visa is paying to their clients for using their network. So next, we'll look at the financials. Let's start with the financials and we'll have a look at the latest Q1 2026 as well as full year 2025 numbers. So from their report, what I want to highlight first is that they paid 4.6 billion in dividends and they repurchased 18.2 billion of their shares. And that's a return to the shareholders of about 22.8 billion. And then in Q1 2026, there was 5.1 billion of shareholder returns as share repurchases and dividends. In the Q1 2026 earnings, I want to highlight a couple of things. One is litigation escrow, and the other one is accrued litigation. One is 3.3 billion. We'll just round the number in here, and the other one is 3.406 billion. This accrued litigation is the money that Visa is expected to pay in court. So lawyers pretty much came back to the management and say, that's it, we're gonna lose the case. That's 3.4 billion. And then this is 3.3 billion. The escrow litigation is what litigation escrow is what Visa has set aside for those litigations. So they pretty much put aside already all the money they needed. So basically this one is a warning and this one is the money that they already have. Is a positive, but money that will be going out of the company. Revenue grew in Q1 2026 and the management points out growth in payments volume, cross-border volume and processed transaction as the key driver behind that growth. So in our usual manner, we'll turn to the financials in trading view. We'll have a look at the quarterly numbers first. You can see steady revenue growth over the last 8 quarters, pretty much double digits. There have been 3 quarters with single digit, but otherwise double digits revenue growth in the last 8 quarters. Scroll down to the net income. We can see the net income was growing steadily as well, more or less flattish, growing from 4.59 to 5.80 in the last 8 quarters, but pretty healthy as well. A few of the quarters when the revenue went down. And diluted EPS of $3 per share in the last quarter in Q1 2026. We'll now change to annual. We'll have the revenue from 2019 onwards, we can see the revenue has been growing steadily over the last few years. It's been pretty much double digits, with one exception being the 2020. And this number is important to look at. We're asking if Visa is a recession-proof stock, and we can see what happened during the pandemic when we stopped using Visa as much as the year before. We can see that their revenue dropped by just a little. It's negative 5% drop, but still from 23 billion to 22 billion almost, and then growing from there. So that kind of gives us an idea of what could happen with Visa if we hit a recession. We can also see that the costs have been growing steadily, but that's pretty much expected looking at how the revenue has been growing from 23 billion all the way to 40 billion. So not a major red flag, but something to be aware of. Scroll down and look at the net income as well. We can also see net income during the pandemic drop from 11.65 to 10.5. That's a 10% drop. So that's what we expect to see in a recession, I guess, for our question. But we can see that the net income is steadily been growing since the pandemic, and we can see it's 20 billion, about 50% of the total revenue. That's a pretty healthy number. Also, considering that they returned to the shareholders 22.8 billion, that's pretty much the entire net income. Diluted share earnings per share were 10.10 in 2025. That's pretty healthy as well, and we can see that they've been steadily growing over the last few years. Switching to the balance sheet and looking at the assets and the liability, we can see that they have 99.63 billion in total assets. If we remember, there was 3.3 billion in cash set aside for litigations. We can see the cash and cash equivalent have been steadily growing from 9 billion to 21.36 billion. That's pretty healthy cash position. And total debt, we can see that net debt has been negative in the past. It's currently positive again. We can see that they started borrowing again. The debt was reduced in 2023, 21 billion, but then is going up again, which is 26.08 billion at the moment. We'll now turn to the statistics as well, and we'll change to the annual straight away. We can see that Visa is currently selling for a PE of 31.44, and if we look in the past year, we can see that the lowest it's been selling is 25.94. I researched in the last 10 years, 25 was the lowest PE that they've been selling for, and that's the multiple that I use for my bear case scenario. For the bull case scenario, I use a PE of 38, even though it's been selling for a PE of 42 and 14 as the highest in the last few years. And then I use for the base case scenario PE of 33. We've seen that it's been selling for a PE of 33 in 2019, in 2025, and is currently selling close to that. Scroll further down to the margins, we can see very solid gross margin of late 70s, 77.31 for 2025, and it's currently at 78.69, and they've consistently been above 75%, which is pretty healthy. And as we said already, the net margin really solid in there, 50%, dropping slightly below 49.63 for the last year for 2025, but still pretty solid. Half of their revenue goes into net margin, into net earnings. That's pretty healthy. And then looking at the current ratio, a current ratio of 1:11. I like to see it above 1.5, but still pretty healthy. I have no doubt that Visa will pay their suppliers, will have no issues with that. We've seen how easily they found 3.4 billion for their litigation. Just again returning to that. And then debt to equity, you can see it sits at 0.55. I like that 0.5, but still it tells us the debt is manageable, and we've seen that it's been low. It was below 50 in the 2019 and 2023 when they reduced their debt, it dropped a little, and then 23-24 when they've been managing their debt well, it's been healthy as well. So yeah, very healthy, not much to say about the debt. So the business is clearly high quality, cash rich, dominant, and incredibly resilient, but the market already knows that, which means now we need to talk about the valuation. So now let's see the intrinsic value according to the three calculators, then put Visa through the 3 case scenarios and the probability weighted table. Warren Buffett calculator is using the historical book value per share growth. Piltown calculator is using the future earnings per share growth, and Peter Lynch calculator is using the price to earning growth or PEG ratio. According to Warren Buffett's calculator, looking at the book value for the last 10 years, we get a price of 39.88 for Visa. way lower than what it's selling at the moment. According to Phil Town's calculator, Visa should be selling for $123.50 per share at the moment, using the growth rate of 12%. And then according to Peter Lynch's calculator, we get a overvalued rating. So there you have it. According to these three calculators, Visa should be selling in a range between 39.88 and 123.50, way lower than what it's selling at the moment. For the three case scenarios, I use revenue per transaction as the key driver, as if the volume keeps rising, the revenue per transaction will grow with it as well. And so in a bear case scenario, with EPS growing at 6%, volume keeps growing, but regulatory pressure and competition forces Visa to pay higher incentives. We could see EPS of 14.25 in 5 years, and the stock could be selling for 356.30 in 5 years. In a base case scenario, with EPS growing at 10%, mid-high single-digit volume growth, incentives stay manageable relative to revenue growth, we could see EPS of 17.15 in 5 years, and the stock could be selling for 566.01 in 5 years. In a bull case scenario, with EPS growing at 14%, cross-border plus value-added services stay strong, incentives are well controlled and cost grows slower than revenue, we could see EPS of 20.51 in 5 years, and the stock could be selling for 779.22. So as we can see, we have positive upside in all three case scenarios. That's pretty good margin of safety. Putting all through a probability weighted table, we can see that we get positive return from Visa in all three scenarios, with a total 5 years return of 76%, making it annually 11.99 plus 0.76% in dividends. That's about 12% from Visa yearly over the next 5 years. So one final thing in our three scenarios, I cannot use the bear case scenario with the upside at the moment for my risk reward. So to make it a bit more aggressive, I put a PE multiple of 22 and the EPS growth of 4% for the next 5 years. That's a bit aggressive, and we got a price of 285 for our risk, and then obviously the reward would be our bull case scenario, $779. So now the intrinsic value on the table, we need to look at the risks. Now up to this point, Visa probably sounds almost too good. Global dominance, massive cash flows, strong shareholder returns. And that's exactly why this section matters, because real investing is about understanding where the cracks could form. First risk is legal and regulatory pressure on pricing. Visa has paid billions in legal settlements in the past and is still setting aside huge amounts of money today for ongoing litigation. We've already discussed how their accrued litigation was up to 3.406 billion. That's money that they are expected to pay for legal cases. And the second risk is client incentives quietly rising. Visa often pays incentives to bank, card issuers and partners to keep them on the network. Those incentives don't show up as expenses, they show up as reduced revenue. We can see this growing from 12.297 in 2023 to 15.751 in 2025. The third risk is mix shift, domestic versus cross-border versus value-added services. Not all Visa's revenue is equal, domestic payments are steady, cross-border payments are growing fast, and value-added services are the highest quality of them all, growing from 7.2 billion in 2023 to 11 billion in 2025. So Visa's long term depends heavily on where the growth comes from. If cross-border stays strong, great. If services keep scaling, even better. But if growth shifts back towards low margin domestic transaction, or if services growth slows, the business still looks healthy, but the quality of growth quietly deteriorates. And finally, operating costs creeping, especially general administrative and card benefits. Visa is a high margin business, but is not immune to cost creeping, especially in areas like general and administrative, marketing, things like airport lounge access, insurance protection, and premium card perks all live inside those numbers. Individually they seem small, collectively they scale fast. If these costs keep growing faster than the revenue over several years, profit may start flattening. With risks on the table, let's now have a look at the charts. And now turning to the charts, we can see that the stock's been in an uptrend since end of 2023, been making higher highs and higher lows. One thing we observed lately is that the price has dropped below the moving averages, is currently selling below the EMA 55 and is approaching the 320 level, a line of ATR dots. If it breaks this level, the further continuation is possible. And next level would be at $300 per share, which would be a psychological level. If we zoom out a little bit and just talk about some support and resistance level, and then we look at the pandemics as well, we can see that about 173, the stock price have found some, used it as resistance initially. It broke through it, but pandemic hit and then it pierced through all the way down, and then the stock recovered in a V shape, just like the stock ticker, and it continued from there all the way up till about $240 per share, where it found further resistance. It failed to break through it, and then it consolidated in a downtrend. It was not a very solid, strong downtrend. It wasn't an aggressive one. It looked almost like a sideways move, but still a drop from 240 all the way to $170 per share. That's a massive $70 per share move. Until in about October, end of 2022, it found it a bottom, and then from there it moved into an uptrend. It used again the $240 per share as a strong resistance level. It pierced through it, so it used this level, it pierced through it, and then it continued. There is further congestion, but I try to avoid put too many lines to make it ugly on the charts, but there was a little bit of a correction in here, and then it continued upwards all the way till about $360-70 per share level, where it found resistance, and then it looks like it's either a sideways move or it might consolidate into a downtrend for a little while. It depends to see. Might be some move like this. And now for the juicy part, we'll book the risk reward and see how that one looks. I'm not suggesting that the stock will move straight away from here. We're just playing with the numbers. As we can remember, the more aggressive bear case scenario returned at $285 per share, so we'll plug that one in, and then we'll put a take profit or reward. The bear case scenario $779 per share, and then we'll plug that in the chart, and we can see that we can get a 10x return if the bull case materializes. And just a reminder where these numbers came from, $285 per share was what we calculated in a more aggressive bear case scenario with the multiple of 22 and EPS growing at 4% as opposed to 6%. And the 779 is the bull case scenario that we calculated in normal one with the multiple of 38 and the EPS growth of 14%. So after breaking down the business, the numbers, the risks, the valuation and the chart, let's come back to the original question. Is Visa the ultimate defense stock for the next recession? And the honest answer for me is yes. Visa is boring in the most possible way. People keep spending, payments keep flowing, Visa keeps collecting a toll on global commerce. It doesn't need growth miracles, it doesn't need perfect economic conditions, it just needs the world to keep on functioning. And that's a powerful place to be. But being a great business is only half the equation. The real edge, the part that actually makes money, is margin of safety. Because when you build bear, base and bull case scenario, something interesting showed up. Even in the bear case scenario, the downside was limited. In a base case scenario, the returns were solid and steady. And in the bull case, the upside was quite massive. That's exactly what margin of safety looks like in real life. Not a stock that's cheap, but a stock that's hard to break, where the worst case scenario isn't catastrophic and the best case scenario compounds for years. On top of that, we've seen on the chart with the possibility of a 10x if you hold the stock for 5 years. So that's Visa. If you enjoyed this analysis and found it useful, hit the like button, consider subscribing and let me know in the comments what stock you'd like me to analyze next on Fundamentals in Motion. Thanks for watching.